Feel like your student loans are a life sentence? You're not alone. Millions are drowning in debt, wondering if they'll ever break free. But here's the good news. You can take control of your student loans without sacrificing your dreams. Today, I'm sharing practical strategies to manage your debt, save money, and even pay it off faster. Let's tackle this together and turn that burden into a plan. Topic 1. Understanding your student loan debt. Before you can manage your student loans, you need to know exactly what you're dealing with. Student loans come in two main flavors: federal and private. Federal loans, like direct or plus loans, often have lower interest rates and flexible repayment options. Private loans, from banks or lenders, can have higher rates and stricter terms. In the U.S., over 45 million people owe $1.7 trillion in student debt, with the average borrower facing $37,000. That's a house down payment for many. Start by logging into your loan servicer's website, Navient, FedLoan, or others for federal loans, or check your private lender's portal. List your loans, interest rates, and monthly payment. For example, Sarah, a 27-year-old teacher, discovered she had $40,000 in federal loans at 4.5% and a $10,000 private loan at 8%. Knowing this helped her prioritize the higher-rate loan to save on interest. Next, understand your repayment plan. Federal loans default to a 10-year standard plan, but options like income-driven repayment can lower payments based on your income. Private loans are less flexible, but some offer refinancing. Knowledge is your first weapon. Without it, you're fighting blind. Don't skip this step. Even a quick 10-minute review can reveal errors, like incorrect balances, or opportunities, like unclaimed tax deductions for loan interest. This clarity sets the stage for smarter moves ahead. Topic 2. Choosing the right repayment plan. Your repayment plan can make or break your financial peace. For federal loans, you've got options. Standard, fixed payments over 10 years. Graduated, payments start low and increase. Or income-driven repayment, IDR, plans like PAYE or Repay, which cap payments at 10 to 20% of your discretionary income. IDR plans are a lifeline if your income is low. Some even qualify for $0 payments during tough times. Take James, a 30-year-old social worker earning $45,000. His $60,000 loan had $600 monthly payments on the standard plan, eating half his take-home pay. He switched to an IDR plan, dropping payments to $200, giving him room to save for emergencies. After 5 years, his payments adjusted as his income grew, but he avoided default. Private loans are trickier. Most stick to fixed or variable rate plans. If your private loan payments are crushing you, consider refinancing to a lower rate, but only if you don't need federal protections like forgiveness. A 2024 study showed 1 in 8 borrowers default on private loans due to inflexible terms, so explore all options. To choose, weigh your income, job stability, and goals. Want to pay off fast? Stick with standard or refinance. Need breathing room? IDR is your friend. Visit studentaid.gov to compare federal plans or call your private lender to negotiate terms. The right plan aligns with your life, not just your debt. Topic 3. Strategies to pay off loans faster. Paying off student loans faster isn't about winning the lottery. It's about smart, consistent moves. First, prioritize high-interest loans. If you have a mix of federal and private loans, target the one with the highest rate. For example, paying an extra $100 a month on a 7% $20,000 loan saves $2,400 in interest over 5 years. Use the avalanche method. Pay minimums on all loans, then throw extra cash at the highest rate one. Here's how it worked for Lisa, a 34-year-old nurse. She had $50,000 in loans. $30,000 federal at 4% and $20,000 private at 9%. She paid minimums on the federal loan and put an extra $200 a month toward the private one. In 3 years, she eliminated the private loan, saving $3,000 in interest. Another trick, make bi-weekly payments. Instead of $500 a month, pay $250 every 2 weeks. This equals an extra payment a year, cutting months off your loan term. Also, redirect windfalls, tax refunds, bonuses, or side hustle cash straight to your loans. I threw a $1,000 freelance gig at my loan last year and shaved a year off my payoff timeline. Don't forget lifestyle tweak. Cut one streaming service, $15 per month, or cook more, $50 per month. And you've got $780 a year for your loans. Small sacrifices add up, turning years of debt into months of freedom. Topic 4. Exploring loan forgiveness and assistance programs. Loan forgiveness sounds like a dream, but it's real for some. Public Service Loan Forgiveness, PSLF, is a big one for federal loans. Work full-time for a nonprofit or government employer for 10 years while making 120 qualifying payments, and your remaining balance is forgiven, tax-free. Over 1 million borrowers have applied since 2007, though only 4% get approved due to paperwork errors. Details matter. Consider Maria, a 40-year-old public school teacher. She had $70,000 in federal loans. After 10 years of payments on an IDR plan and proper PSLF certification, $45,000 was forgiven. She now saves for a home instead of stressing about debt. If you're in public service, check your eligibility at studentaid.gov. Other options include teacher loan forgiveness, up to $17,500 for educators, or state-based programs for doctors, nurses, or lawyers in underserved areas. Private loans rarely qualify for forgiveness, but some employers offer repayment assistance as a benefit. Ask HR. In 2024, companies like Google and Aetna offered up to $10,000 in aid. Beware of scams promising instant forgiveness for a fee. Legit programs are free to apply for. Research thoroughly, and if you qualify, act fast. Some programs have limited funding or changing rules. Forgiveness isn't a given, but it's a game changer if you qualify. Topic 5. Common mistakes to avoid with student loans. Managing student loans is tough, and mistakes can cost you thousands. First, don't ignore your loans. Defaulting, missing payments for 270 days on federal loans or 120 days on private, tanks your credit and adds fees. In 2023, 7% of borrowers defaulted, facing wage garnishment or legal action. Set up autopay to stay on track. Second, avoid paying only the minimum without a plan. Interest piles up, extending your debt. For example, Tom, a 29-year-old engineer, paid minimums on his $30,000 loan at 6%. After 5 years, he still owed $25,000 because most went to interest. Extra payments early on would have saved him $4,000. Third, don't refinance federal loans without weighing the cost. Refinancing to a private lender might lower your rate but strips away federal protections like IDR or forgiveness. Also, avoid co-signing loans for others. It makes you liable and can hurt your credit if they miss payment. Finally, don't fall for debt relief scams. Legit help comes from studentaid.gov or nonprofit counselors like the NFCC. Check your loan terms monthly, dispute errors, and stay proactive. Avoiding these traps keeps your debt manageable and your stress low. Your student loans don't have to own you. Today we covered how to understand your debt, pick the right repayment plan, pay off loans faster, explore forgiveness options, and avoid costly mistakes. Start small. Check your loan details, set up autopay, or throw an extra $20 at your highest rate loan. Every step moves you closer to financial freedom. Don't let debt define you. Take control today and build the life you want. You're now ready to tackle your student loans like a pro, and I'm so proud you stuck with me. Want more ways to crush your financial goals? Check the description or pinned comment for exclusive tips and resources I've got for you. And since you're here, YouTube's lined up the perfect next video. It's on the screen now. Keep fighting, and I'll see you in the next one.